Welcome back, traders and investors, to pre-market info on the OptionsHouse platform. I have Matthew McCall of Penn Financial Group. Matt, busy morning for you, huh?
It was a busy morning, yeah. Not work wise, but living in New York City, sometimes it's tough to get around.
Okay, well, you made it in, so we're glad. We're glad to have you back for an interview here. And the last time we found out about your education, your background, and all this stuff. But I would want to ask you a little bit different question here. How do you prepare for your trading day? I mean, do you do a lot of your analysis? Do you look at charts at night? Or are you kind of guy that just has your systems? You hit the button in the morning, you print out your buy and sell orders, or what do you do to prepare for the markets?
Yeah, I'm not one of those. I don't want to call it black box, but there are a lot of people that just have, they come in, hit the button, and says this is green, this is red, this is buy, this is sell. Unfortunately, I've never found that to work because I believe the market is not that easy. It can be simple if you find a simple way to attack it, but it's not that easy to hit a button. And there's a lot of people out there that try to sell systems like that. Unfortunately, a lot of times it works until it stops working. So you have to kind of catch it when it works, and when it doesn't, it doesn't work very well. Me personally, I look at a lot of charts. I started this business as a technical analyst, so I think the charts tell the story of the market of individual stocks or ETFs, and then of course constantly reading. When I speak at seminars and do things like this, Joel, I can't really put enough presence on just education and reading. You may think you know everything, but you don't. I've been doing this for over a decade. I love this. I think I'm very good at it. The problem is, though, I'm not going to sit back and say, you know what, I'm good enough. It's like a superstar athlete. Once they get to the pinnacle of their sport, they don't stop working out. You have to continually work out. And I'm not comparing myself to a superstar athlete, but I'm saying as the average investor out there, I think you must continually read, continually educate, and a lot of it's going to be garbage, but you take what you can out of there. So I try to read as much as possible. When it comes to the actual daytime waking up, charts before I go to bed, and then wake up in the morning, same thing, charts, and of course, see what's going on around the world. I love reading what's going on in China and everywhere else around the world.
Well, a superstar athlete also probably would have jogged home from the gym instead of taking the cab.
All right, so you got to tell everybody to take a cab home from the gym, huh?
Well, I don't know if you heard or not, but I told everyone before you came on.
Oh, thanks. I did not hear. I was in the cab. How could I hear?
Because you could listen to Options House.
Yeah, that's right. You can listen to the
Benzinga
show
on your mobile device.
That's
I mean,
right,
come
that's
on,
right.
come on.
That was a softball for you guys. I set that up for
Okay.
you.
All right. So I'm a big S&P 500 futures. I love to follow. I love to follow the 24-hour market. That's my main staple when I do my. Really more old-fashioned than anybody. I still do the levels by hand. What's your? I mean, do you follow the I can't even get that word. The old Dow Jones Industrials. You follow the S&Ps, or do you stick with your ETF medicine with the Spider? What's your go-to indicator?
I'll use the S&P, but more and more of these days I'm using the Spider, just because a lot of people that follow me, they know the levels on a Spider versus the S&P 500. I'm still old school. I personally do the S&P 500. That's just what I've always learned. And the Dow only being 30 stocks, 30 large cap stocks, it's not a true barometer of the market in my mind, and even the S&P 500 largest stocks, not a true barometer of the overall market. But for the most part, I think a lot of people know it, so it's obviously easy to get that information out there. And I think it's just an overall barometer for me. So I'm not going to base all my buys and sells on my individual stocks and ETFs on what the S&P 500 is doing, but it does give you a great idea of what's going on. I'm looking at it right now, and I've been saying actually for about 2 weeks, I think we're extremely overbought here. I think we're due for a pullback. I think it may have started actually last week, and I think we followed through yesterday. We could have some more downside. So I look at the S&P 500 and say, okay, well, there's the 50-day moving average. We could easily pull back to that, which is the middle end of the range. At that point, maybe start doing some buying there.
And where does that 50-day come in? And so the Spider. So that's you just you have the SPOOs up on your screen, or you just SPY. You're not even paying attention to the SPOOs.
No, I'm looking at the S&P 500 right now. So it closed yesterday, 1,800. So the 50-day moving average is around 1,745. So just call it 1,750. So right around that 1,750 area is where I'm looking for support. And if you draw, going all the way back to April, as a matter of fact, you can draw the trend lines on the upper end and lower end of this trading range, and that kind of falls right in the middle of that trading range. So a lot of times we've actually pulled back. As a matter of fact, in June, August, and October, we pulled back to the lower end of that trading range, which right now is around 1,700. I don't see us pulling back another 100 points in a near term. So I think probably pulling back about halfway would give us a nice entry. Plus, as far as reward versus risk, when you're buying here, obviously your risk comes all the way down to 1,700 because it's a lower end of the range. If you're buying at 1,750, it cuts your risk in half and increases your reward dramatically. So if I see 1,750 S&P 500, unless something changes, I'll probably start doing some major buying at that level.
Okay, I'm kind of stuck in some weekly Spider 181 puts, and so it's not going to get to 1750 this week, right? I'm going to have to wait a little bit longer than that.
I would be surprised. I mean, you're looking at, what, a 3% pullback or so if that happens. I'd be very surprised if you see a 3% pullback in the next 4 trading days. I got to tell you, I'm extremely long in the market. If that happened, it would kind of stink for a couple of days, but I'd like it. I think it'd be a way to really wash out any of the weak holders out there. And every once in a while, you know as well as I do, you kind of need a bit of a sell-off like that to get the market back to normal. I consider it a healthy pullback. Unfortunately, I don't know if we're going to get it by Friday for you.
Okay, so you look at your charts, you do your ETFs, and SJC here is, what factors do you look at to drive the market? I mean, are you looking at the ETFs and oil, gold, bonds, the dollar, money supply? Are you following those things, or are you strictly, sticking with the technical formations in your ETFs that you trade?
Well, a lot of the investing I do, besides just the technicals that we talked about, I look at what I call macro themes. I do a top-down approach to my investing, and I always have. I just look at the market as a whole, break it down into countries, sectors, and then down into individual ETF stocks. So I try to find what I consider macro themes. And, of course, they don't come along every day or every month. They're longer term. One, for example, that I like, we own Ford Motor, for example, symbol F. Ford, look at the auto companies as of late. The average age of the automobile on the road right now is the highest ever. We're seeing auto sales starting to tick up again in Europe. Auto sales that just came out of China this last week were very bullish. So you're seeing this industry, to me, at a level that's come down to, we have to have people in America need to upgrade the cars, new cars. You're seeing people in emerging markets that never had enough money to buy cars that can now buy cars. In Europe, people were sitting on cash for a very long time because of what went on, are now back out making larger purchases. So you look at it as a whole, at 3 different continents, and an industry that could really benefit from that, and that has really trimmed its fat, of course, with the unions over the last couple of years. So that I look at these macro themes as well, and then from there try to pick, okay, you can come up with a macro theme, but what do you do with it? Do you buy the ETF, which is CARS, CARZ, which is a basket of the large auto manufacturers? You buy individual stock like Ford. I did both those. Or do you buy like a Toyota? You look at Japanese. Or do you buy the auto parts makers or auto retail stores? There's a lot of things to look at from there. But that's another thing I try to do on a daily basis. But again, we don't come up with them very often.
And so how you playing, you mentioned an individual stock here, so how you playing this Ford here? I mean, it can't get through 1720. I mean, sticking out like a sore thumb here. Are you a little bit worried it's putting in a topping formation there, and you're going to try and lighten up if it gets up to that 1720 area? Or are you a Momo guy, and if it breaks above that 7020, you're going to buy, some more shares?
Well, this is a bit of a different play for me. We do swing trading here, which would be this chart I wouldn't really like for swing trading, but I'd look for a break at about 720, as you said. But this is a long-term theme. We're looking at this is going to be a theme that takes years to play out. So I can't try to get every little swing in the market. We bought in around 1680 about a month and a half ago, I believe. It ran up to 18 and change. Sure, could you have taken a 12% profit? Yeah, but we're looking for a big-time gain here. Longer term, I see, pull back in October, and then we pull back again in November. Every time we pull back, it's been to a little bit higher of a level. So that's good for me. So it's almost forming a bit of a symmetrical triangle formation, where if it breaks above 720, it's great. If it breaks below 1650 or 60, then obviously I got some issues.
Okay, there's a lot of different ETFs out there, and there's liquid ones and illiquid ones. Do you stay away from those illiquid ones?
I don't, and the misconception is if they don't trade a lot of volume that you shouldn't invest in them, which is not true. Unfortunately, the industry gets a bad name when it comes to that. There's a lot of ETFs that do not trade a lot of shares. They may trade a few thousand shares a day. But what's more important is a bid-ask spread. If you look at the bid-ask spread, it might be, let's say, 28 50 by 28.25. If it's 5 cents, then I'm okay with it, because I'm going to you put a limit order in. Many times your broker will get your shares filled. If you're buying large amounts, you call your broker, and you actually a lot of times can call through, and they actually will create shares for you. But for the average investor who's buying a few hundred shares, 1,000 shares, put in a limit order. If it gets filled, it gets filled. If not, then it wasn't meant to be in my mind. But you look at the bid ask, because if the bid ask spread is, let's say, 2 or 3%. As soon as you buy, you're down 2 or 3%. So there's no reason to do that. So I look at bid ask spread. Obviously, I would ideally like to have more volume, but there's certain situations with niche ETFs that I go for it anyway.
Okay, just going back to the auto plays here, and I was looking for a little bit of a retracement in the Tesla. SJC thinks Ford's a little bit boring. He looks to maybe be a more active day trader, and he mentions the money supply. I remember the money supply. That used to be an indicator. How long was that ago? 10, 15, 20 years ago, where people looked at the money supply. But going back, Tesla, does that fit into your car scenario, or is that just the PE just scare you away from something like that?
Well, considering I took a cab today and I didn't walk home, I'm not much of a greenie. So I could care less about the electric cars, to be honest with you. I think Tesla, I think Elon Musk is a genius, and he'll probably figure this out. Way too overvalued for me. Too many potential issues going forward, with the fires and everything else. And they're still not selling a lot of vehicles. I mean, they're very expensive vehicles. We're not there yet. I don't know if we get to the point in the next 10 years where electric vehicles really run it. Because with gas prices coming down, more energy being found here in the United States, I just don't see the electric vehicles really taking off in the near future. So to me, I'd stay away from it here. Technically, it's broken down as well, as you can see in the chart. It has broken down, and I think we could pull back down into the 80 level. I may visit the 80 level if it comes down there, but right now I think there's no reason to take the risk with Tesla.
Okay, and so you talked about the spiders and the cars. How many different ETFs do you trade? Do you have, favorite ones, non-favorite ones, or how many actually ETFs do you trade?
A lot. I'm looking right now at a list. I'm working on my 2014 outlook. Every year I put together an outlook, ETF stocks, major themes. It's about 15 or 20 pages, and I put actual specific plays in there. I try to break it down to about maybe 10 to 15 ETFs and about 10 to 15 stocks in the outlook. I have a list now of about 35 ETFs, and I'm not even done going through them all. So, everything I'm looking at right now, from an IPO ETF to a cloud computing ETF, to a water ETF, to an ETF that tracks Japan at the same time shorts the yen. So it can be whatever themes I think are going at that time. If there's an ETF out there for it, it comes onto my watch list.
Okay, now you did, and this is in the news here, you did an ETF article yesterday on drones, and that was big in the news yesterday. We discussed it earlier on the show. Those stocks just took off, flying off the open, and just crashed the rest of the day. So how you looking at this? I mean, the FAA, are they going to allow this? What is the ETF for the drones? What is it, FLYY? Or something? What is
Unfortunately, no ETFs out there for drones yet, but there is an ETF, Robo, ROBO, which is about the closest as you're going to get to. It's the Robo Stocks Global Robotics and Automation ETF. It's a mouthful, but Robo is a symbol. Just started trading in October. This one of the third largest share there is Aero Environment, which is AVAV, which is a drone company. They do drones as well as charging stations for electric vehicles, and that's one of the companies that took off yesterday. AVAV off the open, rallied up to 31.5 and closed at 29.91. So you could see this company was really rallying on that play. But I will tell you, there's another smaller stock in there that it's often overlooked. It's an Israeli company. It's called Elbit Systems, symbol ESLT. It's a stock that I own. It's a stock that actually gapped up on last Friday, and then it was up again yesterday about 0.3%. Closed at the best level, I believe, ever. Best level since 2011. But the chart on this stock looks fantastic. It doesn't trade a whole heck of a lot. I'll tell you that. I only trade 34,000 shares yesterday. But this is one of the largest drone players in the world. Does a lot. It's based in Israel. Does a lot of sales in Israel, defense as well as drones. Also, it does about a fourth of their sales to the United States as well, U.S. government. This is an interesting play to keep an eye on.
Okay, now you trade the ETFs. Do you try and incorporate any option plays or option strategies into that? And also, you're definitely we're more short-term traders here. What is your typical holding period for your trades?
Well, first of all, the options, very, very rarely. The only options that I'll use, I'll do some covered calls depending on the environment. If I think it's the volatility is a little bit high enough to get some premiums out of it. On longer term positions, I'll just try to knock down my cost basis, bring in some income doing that. But it's been kind of rare recently only because the market's been too strong that I don't want to risk getting called out of a position with a covered call. So that's about the only thing I do options wise for my clients. I might play around for some stuff myself, but for clients, that's all I do. And then what was the second question?
Typical holding period.
Oh, holding period. Sorry. It's gonna for the newsletter, for Market Force, the newsletter, which we do through Benzinga. With that, it's going to be anywhere between a few days to 2 months. I believe our average right now is about 3.5 weeks. And the reason I don't like to give a time frame because as well as I do, you may hit one in the morning, and I've had this before, and you sell by the end of the day. You just get a nice 5% pop. You know what? If you get that in 24 hours, let's take it and run. Let's not get greedy. There's other times that you get into a position, a stock or an ETF, it runs and keeps running. You can put a trailing stop in, and it just keeps going. And that's great too. Or vice versa. If you have one go against you very quickly, you want to get out. So to me, I will hold longer if the chart still looks good and it holds support. Why get out? Why try to find another winner when you have a winner? So that's why sometimes the holding period's a bit longer. For my clients, we have positions, FMC, for example, it's a chemical company, very large, diverse chemical company. FMC, we bought about 5 years ago. We're up almost 300%, and it still looks good. It hit a new all-time high 2 weeks ago. So for me, I'm going to let that keep going. There's no reason to sell at that point. The fundamentals are still good. The chart looks good, and the business plan still looks good. So I let the position really dictate the holding period.
Okay, so what do you think about the oil refiners with the Brent crack spread close to $20 here? DJs, what ETF would best take advantage of this trade? And I guess he's looking. I guess he's getting bullish oil down here with the crack spread narrowing. Or what? What do you play the USO for that?
Yeah, I actually own some of the USO right now. I think we're right around break even, as a matter of fact, on that. When I look at USO, the problem with this ETF, it does the front month contracts, crude contracts, and it's not the Brent, it's the West Texas, what it uses. The problem with that, you can run into tango, which you have to obviously roll out to the next front month, and every time that contract expires, roll into a new one, and that could obviously weigh on the price of the ETF. I look at USO, and obviously had a major breakdown middle of last week. It was consolidating, going sideways, but then we had the Iran deal, which came through, which I think is a bunch of BS, so I'm not too worried about it. And you can see USO snapped right back from that. I need to see USO break above about 34.5. If we can do that, I think we're looking much better. As I said, we're about break even here, and I'm willing to hold at this point. And I think just oil is very oversold. I think we're due for a bounce. And I also look not only at crack spread, but I look at the value of the U.S. dollar as well, because obviously there's a relation between the U.S. dollar and commodities, specifically oil. A weak dollar as inverse effect on oil. And a dollar right now, it bounced yesterday, but I'm not too keen here on a dollar, though, right now. So I think the dollar continues to fall, which would be good for oil.
Okay, any emerging market plays?
I'd say probably. I mean, emerging markets obviously have not had a good year at all. You can really look all around. There's two that I would say I like. I'm giving away two of my topics here for next year. One is the Greece ETF, GREK, Global X Greece ETF. The PE ratio of the Greek equivalent of the S&P 500, let's say, is at 2. I mean, 2.0, which is absolutely insane to me. And obviously, the reason it trades at such a low multiple is we all know what happened in Greece. But I just think things have been turning around. Greece is not going anywhere. It's not falling off into the sea. It's not leaving the EU. It never was going to leave the EU. I see great possibilities here when it comes to GREK. It's had a pretty good year already, with a few emerging markets actually doing well. And the other one is Econ, ECON. And this is the emerging market consumer ETF. So it's a basket of stocks based in the emerging markets, which will target the consumers that live in the emerging markets, not people outside emerging markets, but the middle class that's growing in these emerging markets. And the emerging market index got crushed this year, and Econ is actually up this year. So it's greatly outperformed already. Very choppy chart, but I think longer term, these are probably my two favorite emerging market plays.
Okay, and I just was looking at that USO. It looks like it's finding some major support here at the $33 level. Just wanted to get your take here, just on your overall market call here. I was looking at the S&Ps and just had 4 or 5 closes right in a 3-point range, which was very, very rare. And Chelsea's just looking at, we're trading down here. Do you take some chips off the table here, or do you wait for a rally back up, to the $1,800 level? Or, if you've been a long-term investor in here, and what's your call? Do you think put some hedges on now, or wait for a little pop? Or if you're long-term, just ride out this dip to 1750?
Yeah, if you're long term, I do absolutely nothing. I mean, 2 days ago, we had a new intraday all-time high. 3 days ago, we closed at a new all-time high. So if you're trying to pick the top, you would have been trying to do this several times in the last year or two. And the problem with this is, in an ideal world, you sell here, sure. And you get back in if you pull back, let's say that 1750 level I'm looking at. But in an ideal world, it doesn't pull back immediately to 1750. It may pull 1760 and you never get back in, and then you're chasing your tail. So as a long-term investor, you do absolutely nothing. Because as long as this uptrend continues, you're going to have natural rotation up and down, and you're going to have some positions do better than others. Sit in your hands, go run around the park for the next week or two. Don't do anything. If you're a swing trader short term, yeah, I think you could take some profit here. Or if you have something that's underperforming, get out here. You could get back in. I think it's a lot of positions that are overbought at this level, and I think we can see about a 2 to 3% pullback in the next week or two. But I do think we end higher by the end of the year. So use any type of weakness to buy into. So if you are a swing trader and you know how to do that, yes, I'd take some profits here. I wouldn't sell everything. Because you know what, the market to me looked toppy about 3.5 weeks ago, and we continue to move higher, another 40 points. So a little bit off the table, but I still keep some in there.
Okay, all right. We've had Matt McCall on of Penn Financial Group. You can check out his product on MarketFi if more interested in trading the ETFs. Matt, thanks a lot for coming on. It's a great interview. It's great to get your perspective on the markets here, and we'll let you get on with your trading day. Thanks again.
All right, my pleasure. Thank you very much.
We love you, Matt.